Hello, everybody. Welcome to Intermediate Accounting 17th edition video solution walkthrough. This is for Keystone, Weinget, and Warfield, exercise 1614. The book I'm using is the 17th edition of Intermediate Accounting. Authors are Don Kiso, Jerry Weingant, and Terry Warfield. The question used in this presentation is copyright 2019 by John Wiley and Sons. Wiley, all rights reserved for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 through 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Okay, so right over here, let's go ahead and take a look at exercise 1614. So Tweedy Company issues 10,000 shares of restricted stock to its CFO, Mary Tokar, on January 1st, 2020. So we're doing restricted stock. The stock had a fair value of $500,000 on this date. The service period related to the stock is for 5 years. Vesting occurs if Tokar stays with the company until December 31st, 2024, which is the end of 5 years. Par value of the stock is 10 at December 31st, 2020. The fair value is $450. Don't care about the 450. Rather, what I care about is what is the fair value on the date of the issuance. So on 1/1/20, because we're giving out shares of stock, what I'm going to be doing is I'm going to be debiting unearned compensation. And if you saw this, what type of account is unearned compensation? It is a contra-equity account. So it's essentially going to be holding down the common stock at par, additional paid-in capital common stock that we're going through and issuing. So right over here, basically the 500,000 is the fair value on the date of issuance. So this is going to be, let's see here, 10,000. Par value is 10. Okay, so over here, my additional paid-in capital is going to be the remaining balance. Okay, so this is to record stock grant. Okay, now what would happen here is on what happens every year. Well, the stock compensation expense, and we're going to be crediting unearned compensation. Okay, so, and that's nice, you earned compensation. Okay, so over here on 12/31/20, 12/31/20, and every single year thereafter, we're going to be making the same journal entry. And what that is going to be, this is going to be 500 grand because the service period is 5 years. This is going to be divided by 5. So every single year, I'm going to be making the same journal entry. Okay. And if we take a look over here in terms of our stock compensation expense, so we have unearned compensation, and then we have stock compensation expense. This would be to record stock compensation expense over here. So I'm hitting this every year for 100 grand. I'm hitting the account for that. Actually, that sounds a little bit violent. I'm recording stock compensation expense every single year, and I am decreasing unearned compensation at the same time. Now, the unearned compensation had a beginning debit balance of 500,000. So why is this so important? Well, we're now getting to the point over here where on July 25th, 2024, Tokar leaves the company. It's in the service period. So what's going to happen is Tokar is going to be giving up all rights to these shares. So on 7/25/24, we're going to go ahead and debit the initial stock issuance because we're going to ratchet that. We're going to pull that back. So right over here, this is going to be for 100,000, and this is going to be for 400,000. Now, the other thing we have to go through and do is right over here, we've got unearned compensation. My unearned compensation, there's the final year that has not yet been earned. So what I'm going to do here is I'm going to credit unearned compensation because I have to go through and zero this particular account out. So this has to go down to 0. Okay. Now, the other question is Tchaikovsky, well, how do we go through and get this to balance? And this is what I do not like about these questions. And it's because you're now going to go through and now we're going to credit stock compensation expense for 400,000. So when you hear the sigh, that sounds like a happy sigh, doesn't it? I'm going to credit stock compensation expense for everything that I've previously recorded. And that is going to be for $400,000. We are in the service period, so that's what's going to happen. So this is to record forfeiture of stock options. Or excuse me, forfeiture of stock grant by CFO. There we go. So that's how we're kind of going through and looking at this. So if it's in the service period, we're going to credit stock compensation expense for the amount that we've previously recognized. We have to flush out earned, unearned compensation. And again, when we look at what is that is a contra-equity account. So this is how we go through and do our accounting for restricted stock. I want to thank Wiley for allowing me to use their videos. I'm not sure if they will anymore, but they are for right now. Please don't forget to like and subscribe. And if you would like to see other solutions, please feel free to ask for them in the comments. Have a great day, and I look forward to seeing you on the next video. Have a good one.